What's up guys, welcome back to the channel. In today's lesson, I'm going to teach you a smart money strategy that is going to help you become profitable in 2024. This strategy can actually be called a liquidity strategy, where you have to find liquidity before you take any trade. A lot of people came into my DM, about 3 people were in my DM last week, and the question they asked me is this. They said to me, Mr. Solomon, you teach about smart money concepts. Which particular strategy can I use to be a profitable trader? Answering that question was a little bit hard. I just left it, although I came back to answer that particular question. You can be profitable using every single strategy you see me teaching here on this channel, because what I teach you is what I trade. The only way you can be profitable is if you can be consistent doing these things I'm teaching, if you can be committed doing it, and if you can build confidence around it, you find yourself being profitable. Now I'm going to teach you this single one. This particular one, you're going to be profitable using this particular liquidity strategy trading in 2024. I'm giving you this assurance. Once you've applied the 3 C's I just mentioned: being committed, being consistent, and being confident. So let me show you this strategy. So you're going to need a rule. You're going to need rules for this strategy. So I would like the video to take a lot of time. Just smash the like button and try to subscribe if you are new to the channel. The very first thing we're going to need is the trend. Identify the trend. So if you want to use this strategy, firstly, like I said, identify the trend. Don't go against the trend. Focus on where the market is already moving to. Secondly, select the right point of interest. And this is where a lot of people get it wrong. This is what you have to build on yourself. This is not what you you have to do randomly. This is what you have to spending a lot of time on your screen. That's when you can master this particular one. So this is an assignment. If you can't select the right point of interest before you start looking at being profitable next year, try to start selecting the right point of interest. Now thirdly, make sure you identify build of liquidity before that point of interest. So liquidity, right? The spelling is correct, right? Liquidity. Now you have to select the right point of interest. After that, make sure that there's a build of liquidity in front of that your point of interest. Even if it's not a build of liquidity, let it be an inducement area. And remember, inducement is an available liquidity in front of a POI. In this case, it's not a build of liquidity, it's just maybe a little retracement that might lead to a fake out. Not what I'll explain that when we get to the price charts. And after that, this is the 4th rule, which is very, very important. Trade management. These are all the rules you need to be profitable next year, and with the strategy I'm about to treat you. So firstly, you have to identify the trend. Let's assume you are looking at an uptrend. Identify what the trend is doing. What is price doing? You might see price doing something like this. You'll be able to identify the trend, understand exactly what price is doing. Okay, try to identify exactly what price is doing when you move to the price chart. So firstly, like I said, identify the trend. So I have to make this sticker. Now identify the trend. So at this point, let's assume, okay, you've identified the trend. What are we in? We are in an uptrend. Price is pushing to the upside. You can see valid break of structure, label that. So this is actually the trend right here. This is actually the trend. You've identified, okay, you're in an uptrend. So now that you've discovered that you're in an uptrend, what you're going to do is you're going to look for your longer opportunities. There is no need to start trying to short the market right here, since you're in an uptrend. This is a profitable strategy. I call it a liquidity strategy that can make you profitable in 2024. You're in an uptrend right here. Now, after you've discovered that you're in an uptrend, what are you going to do? Secondly, what you have to do is you have to select the right point of interest. That is selecting the right demand zone in this case, or selecting the right bullish order block, right? If some people want to select their point of interest, you're going to see a lot of people coming to select this area as a point of interest. For me, the way I select my zones, I'm not going to select this area as my point of interest. Why? In this case, I have this impulsive move that mitigates something here. Now I see a little pullback. I hope you can see that. This is an impulsive move. And why is this an impulsive move? If you look from the left, you're going to notice that price mitigates something right after we had this sweep of liquidity at this low. So this is actually a very high probability trading setup at first. After the liquidity sweep, price returns to this point of interest, you see that rapid expansion to the upside, which mitigates something like maybe a lower time frame zone that caused this reaction to the downside before an impulsive move that broke structure to the upside. People might actually come to select this as their point of interest. I have nothing against them. It's based on personal preference, right? That's why I said select the right point of interest. Price might actually come to this area and react, right? But based on how I trade, I'm not going to look at that, provided I have an impulsive move right here. This impulsive move will definitely leave a fair value gap. And since I have this fair value gap, I'll be looking at a zone right here which I could trade from. I'm going to look at this zone below here. So selecting a point of interest from this area is a no for me, and it's not the right point of interest to select. Now, in this case, if you selected your point of interest right here, believe me, you selected the wrong one. Select the one below which has a fair value gap. So it doesn't mean that every single time you have to select the one below here. The reason I'm selecting the one below is definitely there's going to be a fair value gap right here, which is going to draw price back. Once price has comes back to this area which you are looking at, price might react a little bit, but we definitely come back to rebalance the inefficiencies we have right here and equally come to mitigate the point of interest we're going to have before we see a continuation to the upside. So next, what did I say you should do? Select the right point of interest. So in this case, I'm selecting this area, just like I explained right now. Now, the third thing I said is there should be a liquidity area. If I see this setup, I can actually take this trade. Why? I already have an inducement area. And what is an inducement? Personally, I call inducement available liquidity in front of a POI. Now, this is an available liquidity for me. If you follow me closely, you notice sometimes I do mark things like this. So this is an inducement area for me. Now, if price comes back to this area, mitigates this zone, I'm going to expect this reaction to the upside, because this inducement area, like I just explained right now, why you should select the right point of interest. A lot of smart money traders, they're looking at this particular area. That's just the truth. A lot of stop losses are below here. So price is going to come, sweep that liquidity pool, mitigate this zone and react to the upside. And another thing you're going to notice is that support and resistance trader, you're going to see this as maybe a support level, because price reacted, push to the downside, move again, retest this same line before it moves away. That they're going to expect another retest and a continuation. Now, this is a very obvious liquidity area for me, the way I trade. But you see, you don't have to be perfect all the time. The way I'm explaining it now, someone might see me and say, man, this guy is perfect. He gets it right all the time. Bro, I don't get it right all the time. Sometimes I might read the price action like this. Price will come, react to this area, move to the upside. So I can only anticipate this. It's my expectation, but price will always do what's on its mind. Understand? So that's just it. But doing it this way is the right way. Make sure you do your part well, then allow the price to do its thing. Now, if you select here as your point of interest, you are doing it wrong. You are doing it totally wrong. Please. Except the price action we have right here is efficient. If the price action we have at this area is efficient, selecting your point of interest right here is nice. But if the price action right here is not efficient, if we have an inefficiency below here, you can look to select your point of interest below here. It will be nice, because after the institutions mitigated this zone, they're going to look to come back to mitigate the next one right here. Understand the order flow of the market. Understand order flow first. Now, continuing. Now, another thing I talked about is liquidity. Firstly, we've identified this inducement area. Now, the next thing we're going to look at is how price builds liquidity. Now, you might start seeing price maybe come, react a little bit to this area, comes back again, react once more, maybe come very close to a point of interest, react, a pullback, a move to the upside, things like this. Then price finally comes back to this area to react to the upside. Now, what you have to notice is that, if price build this price action, take it serious, because this is a sweet liquidity pool. Okay, a very, very sweet. A lot of liquidity has been built at this particular area, especially with this inducement area, which it has been reacting, pulling back, reacting. So if price builds something like this in front of your point of interest, which you might be looking to trade from. So if you don't know what point of interest is, this zone right here is your point of interest. That's the demand zone, or the other block you're looking to trade from. So if price builds this kind of liquidity above your zone, man, take that trade without hesitation. Okay, this is what I love to see. If you've been following me for a very long time, during my early days, when I started teaching newly on this channel, you're going to notice that this is my favorite trading pattern, even though I tweaked it now and there are other things I add, but you're going to note that this is my favorite trading pattern. So let's see a live example. And sorry, what I almost skipped now is trade management. Now, how you actually manage your trade when price returns back to this zone till when price hits your external range liquidity is actually very important. And this is where a lot of people get it wrong. You have to learn about trade management. The mistake new traders do mostly is maybe when price returns back to this zone, they have taken the normal risks they do take by entering trade. Now they see price reacting to the upside, see them loading more position, breaking rules. That's not nice. Stick to your rules. Manage your trade properly. And some people, maybe when they're in a little drawdown, you see them adding more position. Stop that. Work on your trading psychology. Learn how to manage your risks and equally manage your trades. Let's see a live example right now. Now, this is the price chart we're actually going to use for the example. The price chart is actually NZD card. This is the 2 hours time frame, and this particular price action is between the 27th of November till today being the 15th of December. So if, in case you want to do your personal back test, it's actually nice you do that. From the first rule, what did I say you should do? Identify the trend. Now, if you look from here, what can you see? We had a shift in structure at this area, and since then we've been pushing to the upside. I caught a very good trade at this area, and I already got another trade right here. So after this explanation, we're going to come back to this. So this is the price action we're going to use, NZD card 2 hours time frame. Now this setup was actually shared to my Telegram community. Now here is the Telegram community. It was shared on the 5th of December. I stopped trading at that time. I shared the setup right here. As a matter of fact, I shared 4 setups, and it seems 3 of these setups played out. This particular one, price failed to return back to the POI. But in this case, this particular one we have right here played out perfectly with patience. NZD card 2 hours time frame. So this is what the setup looks like when I actually shared the setup, right? So back to the charts to show you how this actually played out and why it's a high probability setup and why you should use this strategy in 2024. Now what you're going to notice from here is that firstly we've identified the trend. We are in an uptrend. If you're looking to short this market on your own, price is pushing to the upside. You see that massive push to the upside. You see those institutional candles where price moves with candles with large body. It's not the first time. You see it's happened right here. You see from here it happened right here. Price pushed with institutional candle with large body. When it mitigates the zone, push again to the upside. Institutional candle. After this pullback, another institutional candle. You see this massive push to the upside. You've seen that. Now an institutional candle right here again, a massive push to the upside. As a trader, seeing this alone, this should tell you that you should be looking for your long opportunities. No need to short this market. If you shorten this market, you are lightening yourself. You are trying to catch a falling knife, and it's not going to end well. Price reacts to the upside, push to the upside right here, and we have the most recent break of structure over here. So when you see this break of structure, what you're going to do as a smart trader, you're a smart trader, you're trading with smart money concept, you're a smart trader. What you're going to do is you're going to select these points of interest we have right here. This is your trading zone right here. This is your pivot created demand zone, and you call this your order block. Why? There is an inefficiency before this zone, and you see there is an inducement area. So talking about inducement area, this is what I call inducement area here. You see this area is what I call an inducement area. Now you see price comes back, reacts from that inducement area. If you took a trade from here, congratulations to you, you've made money from this market. And you see price comes back again to that same level, reacts to the upside. So any trader that is looking at this is going to call this a support level. We've been taking the trades. Once price comes back to this area, they're taking a trade. Now at the same time, price is making opportunity for other trading strategies. Remember, smart money strategy is not the only strategy that works in the forex markets. Any support and resistance trader has made a lot of money from this particular area. This is their support level. They're definitely going to make money from this area because price comes back, reacts, comes back, reacts. Now the first rule, we've identified the trend. The second rule, we've selected the right points of interest. And the third rule, this is a build of liquidity. Price is building a lot of liquidity at this particular zone. This is what I love to see in the market. This is why I call it a liquidity strategy that can make you money. Once you see price building this liquidity, just know that a lot of money is resting below this area. This is what we call a liquidity pool because people taking trade from this level, and this level, their stop losses is placed below this area. That's just the truth. Now, since their stop losses is placed below this area, the institutions see where their eye is. They're going to be looking to trade from this particular level right here. This is going to be the level they have their eye on. They're going to look to sweep that liquidity, mitigate this zone, and they're going to push to the upside. Now you see price reacts to the upside, sweeps this external range liquidity, and now we have a push to the downside that sweeps this low. Hope you can see that. They goes to the upside, sweeps the liquidity at the external range, comes back and sweeps the liquidity at this particular low. So all the people that has their stop loss at this low, they has been taken out of the trade. Let's see how price reacts more. And what can you see? They come deeper to make sure that if you have your stop loss at this low, that you have been taken out of the trade. Now let's see a quick announcement, please. Now the announcement is that our mentorship program will be coming up next year. This Born to Trade, where trading is made easy. So our mentorship program is coming up next year. If you're interested in enrolling for our mentorship, all you have to do is to visit our website at www.borntotrade.com. The E has to be double. And when you get there, you're going to click on take a course, and you will be redirected immediately to this area where it says enroll for a lifetime mentorship. And this mentorship is on a pre-sale price, which is about $166. Now you're going to click on enroll now. This is the area where you're going to get every single information you need about this mentorship. So make sure you take your time to read every single thing you see right here. And these are testimonies from people who enrolled for our free mentorship. So you can go ahead and read those testimonies. So once you've made up your mind to enroll for this mentorship, you're going to click on enroll now. Now you'll be redirected to seller right here. Now all you have to do is you have to click on enroll. That's if you want to make payment from your card or maybe with bank transfer. Now if you want to pay via crypto method, this is our crypto address right here. Make use of the address and make sure you send proof of payment. No matter the payment method you use, make sure you send proof of payment to this particular WhatsApp number here, so you'll be added to our support group where you're going to get every support you need to be a profitable trader. Now if the payment method is a little bit hard for you, this lesson right here, how to purchase the advanced smart money course and lifetime mentorship, is going to help you do it step by step without mistakes. And remember, we are on a pre-sale price. Very soon this course will go back to the original price. Now back to the lesson. So from what you can see, price sweeps the liquidity at this particular low. We've seen a little reaction. Now my expectation is entering my trade right here. So at this particular point, the truth is that I didn't take this particular trade. I'm just using it for illustration, but I actually shared the setup like I showed you guys in my free Telegram community. So if you want to join that community, link is in the description. Now price sweeps the liquidity and let's see how it goes. A little reaction to the upside. So this little reaction to the upside is a fake out. People who want to jump in early trade. So as they sweep the liquidity, some people might jump into, oh, the price is moving away without mitigating this zone. They're going to jump into buy. The price is going to come, sweeps that liquidity once more. You've seen price mitigate this on a little reaction. How does it go? Boom. Price reacts to the upside. So anybody that took this particular trade with this refined zone, because this zone was actually a refined zone, you're going to be making about 1:8R. Very massive. It's going to be a very good trade and it's going to be enough for XMA. So let's zoom back to this particular trade I took at this particular area. And you're going to notice that this is exactly the same process. I hope you can see that. If you look at this area, you can see the price action right here was efficient. Very, very efficient price action. Now price reacts to the upside, comes back to mitigate something at this area. And after the mitigation, you see how price reacts massively to the upside. You see that institutional candle pushing to the upside. We have this break of structure. And you see the trend is bullish. Very simple. Now price returns back. This is an inducement area because they come to rebalance this inefficiency. People who have little or no knowledge about trading, when they see price reacting to the upside, they're going to jump into buying from this area. And now you see price returns, retest that area once more, making it a liquidity area. You see that, retest it, a little reaction. Now push to the downside, reacts up a little bit after it must have swept the liquidity. People who jump into early trades are going to jump into buying because they're seeing this reaction to the upside. The exact same thing we're seeing at this area. I said price is doing the exact same thing. It's just your ability to understand it. Understand that price is doing the exact same thing. I hope you can see that. Now price returns back to our zone and you see how it moves, boom, to the upside. This is how price moves. I've given you the rules and learn to manage your trade. I wanted to show one more example, but let's end the lesson right here. So consider enrolling for a mentorship, consider being part of this mentorship program. This mentorship program is going to help you find consistency in the market, and as a matter of fact, you're going to be earning as you are learning in this mentorship program. Just go into the price chart and study about this strategy and find yourself being profitable as well. So thanks very much, and see you in the next lesson.